Hello again. This is Josh Carr with The Real Angle, and today I am chatting with Chris Pawlik at EPR Squared. So, Chris, how are you doing today?
Doing well. Thanks for having me, Josh.
Good. Thanks for coming on. Any day I get to talk about solar and energy and making real estate more profitable, it's a good day. So let's start with the basics. One thing I always like to put out there, because if I don't, someone always emails me. So again, the company is EPR Squared. Web address is eprsquared.com.
That's right.
Like to get that out there in case anyone wants to Google you while we're chitter chattering. So tell me what EPR Squared is. How did you start it? How long have you been there? All that kind of good stuff.
Yeah, definitely appreciate that. So EPR Squared is an acronym, stands for Energy Producing Retail Realty, and it's a mouthful. So we go with EPR Squared. But in general, it's essentially the real estate definition for the underutilized space that every property owner has to generate power on site behind the meter. And so we went with EPR Squared. Pretty good branding. Might change the name, who knows? But for now, that's where we're at. But the concept and the idea of energy rights came to me back in 2010, 2011. Actually filed a business method
Oh,
patent.
sorry. And I want to jump in.
Yep,
I want to jump in for one moment. Just you
for
said
sure.
behind the meter. I want to make sure
Oh,
everyone understands what that even means. What do you mean
absolutely.
by behind the meter?
Oh, great question. So behind the meter essentially is that the property owner and the tenants that are using energy have a meter on their property that is typically either owned by the
True.
utility or by the building owner. But you can produce power on one side of the meter, which is on the utility side, where you have the utility easement and they have the generation and they provide you the power to the meter. Behind the meter is effectively anything that you do on the property that is not inclusive of the utility itself or the electric utility.
Right. So if you make power behind the meter, you're not paying them for it. They're not paying you for it. It's your power and you get to keep it basically.
Right. It's your
Okay,
equipment. It's
cool.
your
So
power.
let's
It's yeah. It's essentially your energy. So from from that
right.
point forward, if you can look at it as well, it's my energy. I can do what I want with it. I can either produce it or manage it or sell it or provide it for EV charging. It's your power to do as you wish. So from that standpoint,
Right.
it's a real property perspective on energy generation and energy rights in general. So it's a little bit different than what you see normally in the industry these days. A lot of folks are looking at the equipment as a personal piece of property that completely depreciates to zero or amortizes to zero after a 20-25 year period of time. And so if you look at it from a real estate perspective, you're able to really get the most value out of the energy that you're generating because you're basically looking at it as real property instead of personal property. And I mean, a lot of folks that are in the real estate industry understand the difference between those two things. But mainly,
Sure.
if you really want to look at it from a finance perspective, it's cap rate driven, right? You're capitalizing the income streams versus not, right? Versus doing like a 10-year discounted
So
cash flow or something like that.
so let's talk about it. So let's say hypothetically I'm a building owner. I own a building. I have a roof. The roof is currently not being utilized. What are you proposing to me as EPR squared? What is the relationship that we will enter into?
Yeah, great question. So, as a property owner, you have energy rights, you have a utility easement on your property, and you're able to generate power for yourself. So, what we do is rather than sell the equipment, rather than sell the financing to the property owner, we effectively do a sale leaseback of those energy rights from a real property perspective. So, having an electric easement agreement on the property for a certain period of time that then essentially allows the property owner to have all the control that they would need to get us off in the future or essentially buy the system themselves once it's stabilized.
So we do a long-term lease. You're now leasing my roof. You're putting equipment on my roof,
Well, let
and
me let
then
me stop you
you're
there. Let me
giving
let me
me
stop you there. So it's
yeah.
not a
How's
lease.
this work? How's this work?
Yeah, for sure.
Okay.
So
Okay.
you're doing a sale leaseback of the energy rights as real property, right? So you're doing an electric easement agreement that essentially allows you to have this,
Okay.
easement right on the behind the meter part of the property. So you've got the utility easement going to the electric panel, and then you have your electric
Hmm.
easement agreement on the other side of that electric panel. And so once you
Okay.
have that, you can utilize it as real property in the financing world. So everything that you could previously do with real estate from a financing perspective, getting a loan, doing a commercial mortgage backed security on that loan, selling the grant deed, having a REIT with a bunch of these assets in it. You can do the same thing now because you now have a real property interest as the collateral that's underlying the equipment and all of the energy generation.
Okay. So okay. So now there's solar equipment, which is
Correct.
generating power hypothetically, because that's the whole goal. We now it's deeded as it's set up as real property. Okay.
Yep.
And so then what are we doing? What is my company doing with your company?
Definitely. So as a property owner, you are getting a percentage rent of the revenue that we're able to generate from the power. So as EPR Squared, we're aligned with the property owner and with the investors to produce as much power as we can for the highest, to take off the highest price power. So typically in the course of
Okay.
a day, you're spending a lot of money on power or the priciest power in the mornings and in the evenings. And sometimes it used to be during the day, but in California, so much solar has been generated that now the highest price power is actually 5 to 9 p.m. And so what we're doing is we're effectively producing the power, providing it to the ownership or to the tenancy. They are not having to use the power from the utility at that time, and we're providing it to them at a guaranteed discount to the utility. Whatever revenue is generated
Okay.
from that, we're then giving a percentage rent to the property owner. The rest of the money goes to paying off the system, whether it's equity financed or debt financed.
Got it. So in plain English, you put in equipment, my tenants or me or whoever, the building buys the power, whether or not that's me or the tenants. That
Yep.
money then flows to you. You use it to pay for the equipment and your side, which is your economics. And then I, the landlord, am benefiting because we have some revenue share agreement, basically, where I get some percentage of that
Yeah, I mean, if
maintenance
you if you want to
essentially.
think about it this
Okay.
way, the oil and gas industry has oil and gas rights that they have a percentage rent
I mean,
or
I
a
know.
lease
I
fee,
mean,
and it's the same thing. So we're basically
the
utilizing the same type of structure though to do behind the meter energy generation on site.
The way I would think of it as a property owner is it's kind of like the same deal I have with the laundry machine people. The laundry machine people come in, they put in laundry machines, they sell laundry services to tenants, and
Correct.
instead of me paying them rent or them paying me rent, I just get some percentage of every time a quarter goes into the machine, X percentage goes into my pocket. That's it. It turns the laundry machines into a profit center for the landlord. Um,
Absolutely.
and how long do these agreements usually last? How long would this agreement last? I mean, the
So
equipment is long lived, right? So,
yeah, equipment lasts for about 20 to 25 years. Our agreements are effectively, in perpetuity on the property, but we have buyout options that allow the property owner to effectively get us off the property at any time. So we usually do around 7 years in order for the investors to be able to take advantage of the investment tax credit, the accelerated depreciation, and the renewable energy credits associated with the energy generation. And then that flows through to
right.
the benefits of the owner and the tenants as well. So, a lot of times property owners don't have that additional need for more depreciation or investment tax credits because they're already tax advantaged as real property owners. But if you can have a third party investor take advantage, then they can make the price of the power cheaper or provide capex up front actually to upgrade the property. So, provide a new roof or
Sure.
carports or EV charging or, a host of other
Or
additional
some other
upgrades.
benefit. Yeah, I mean, for me
Yeah.
as a landlord, I see it as just okay. Look, if I can lower the cost of my power, especially it's for myself, you know, if it's like an apartment building where I'd be paying for the common area, or an industrial building where maybe it's my bill, whatever. The point is, if I can lower my cost of power and in theory also get a little bit money thrown back to me because now the revenue is flowing and it's going into my pocket, that's kind of win-win. I would imagine the real downside is just we're locking up for a number of years, which is fine because we're used to leases, and it's a relatively new product. So I imagine the real risk for me, to the extent there is risk, is if I go to sell the building in 3 or 4 years, I have to now explain it to the new potential buyer so he or she understands what we're talking about. But
Yeah. Interestingly,
that's
though, we've
not
we've actually had that.
insurmountable.
Yeah. Well, interestingly, we actually had that happen, and the property owners and ourselves, we were preparing to have this discussion with the potential buyer, and everybody had all their ducks in
Sure.
a row, their T's crossed, I's dotted, just waiting for the questions to be asked. And it was just one of those things that the buyer comes in and says, "Hey, guess what? That's what's the solar on the property, right? Perfect. Check the box, moved on. It didn't impact their loan, it didn't impact their property or their operations in any way, just like a normal utility
Yeah.
easement, right? I mean, you look at your
I mean,
title and
that's why I
it
come
has
back
to
to
be there.
that's why I'm coming back to laundry machines, and it's
Yeah,
this thing, a contract of machinery, and laundry machines again. It's X amount of years, and then we revisit it, and maybe we get a new vendor, or maybe we don't.
right.
Um, Fascinating. I love the fact that all of this is happening with you jumping in front of the utilities, like basically saying to the utility companies, in essence, "Hey, you guys are just too gosh darn expensive. Forget you. We'll just do it ourselves."
Well,
Um,
and let me let
which
me let me make
I
sure I
love.
don't get myself into too much trouble there, Josh, because at the end of the day, we're trying to help the utilities out in a way because a lot of the new developments that are happening, they're already a year or two behind in terms of upgrading the energy systems. Or, if we need to do EV charging, right, or building electrification, or
Right.
let's say AI data centers need upgrades, or, a host of other new energy demands. Like I just don't think that the
Right.
utilities have the bandwidth to do it all, right? They've done a great job up to now. For the past 100 years, we have five nines reliability on electricity, but we're going into a new generation of where an entire electric utility grid needs to get upgraded in this country, and we're doing it
Right.
building by building. So at the end of the day, we're kind of like the tick on the rhinoceros, if you will. But slowly but surely, every property owner is going to have this as an issue.
No, and it makes sense. I mean, look, utility companies are good at, buying 100 acres and putting a ton of hardware down. But when it comes
Exactly.
to going building by building, they're not efficient because
Yeah,
that's not
it's
what
not
they
their
do.
it's not their
And that's
normal business
fine,
model.
and yeah,
Totally.
and it's worked, and frankly, they're big guys and they want to deploy large amounts of money, and they can't be bothered to just be like, well, what about Josh's roof? It's one roof.
Yeah.
Cool. So how long has EPR Squared been around for? How long have you guys been doing what you do?
So I came up with the concept in 2010. Started the company in
Okay.
2011 with a business partner, a friend of mine that we went to college in at Berkeley with, and have been working on it ever since. We've basically, spent better part of a decade taking this idea, this esoteric idea of energy rights, and making a company around it and building projects that benefit property owners from day one without any money out of pocket, right? I mean, we're paying for new roofs, we're paying for upgraded energy management systems, carports,
Right.
even water efficient landscaping that's underneath the carports, right? So a lot of ancillary benefits. And then also, by the way, for the last 5 to 10 years, our property owners have been saving money on electricity and getting additional revenue in their pockets. Higher NOI, higher value, things that I think are very resonant these days, especially with what's going on in the markets in general. But yeah, I mean, this has been going on now for 10 years. We've built, a few projects. We're, managing a few projects. We're working on building more and,
Sure.
quite a bit of a pipeline as well. So, it feels like all the right winds are behind our sails.
So let me ask you a markets question. So I mean,
Sure.
you're West Coast. Is this, since it's all behind the meter and it's not really being driven by, say, utility incentives, and it's really the investment tax credit stuff that's federal. So, um, can you do this in any state? Are some states more beneficial? Does it not matter? And I realize you may be a West Coast guy, so maybe you just have a natural, better market, better penetration out there. But like, this could be done in any market, or what do you think?
So what I like to say is that every property has energy rights. I mean, whether it's a piece of land, whether
Okay.
it's a single family residence, whether it's a 40-story high rise, every property has it. And every, you know, owner can develop their energy rights with solar and other energy generation equipment behind the meter in any state. But as you know, and as probably a lot of your real estate, viewers understand, location, 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 right? And what does the
Sure.
location have to do with energy rights? Well, price of power first and foremost, right? I mean, if you have a very high price of power in your state or in your utility area, because for example, in California, there are a couple utility areas that have the lowest price of power in the country. They literally have price of power that's lower than
Sure.
Tennessee Valley Authority. That's all mostly hydro, right? Like it's I think
Right,
less
and the
than
solar
10 cents
panel
a
costs the
kilowatt hour.
same no matter where it is. Yeah.
Right.
Yeah.
The
So
development cost might
okay.
be a little different in terms of labor. There might be some
Okay.
soft cost differential here and there,
Sure.
but in
Sure.
general, it's pretty much the same. And so you really need to focus on, how much your current electricity rates are. If they're really high, it's a no-brainer. I mean, it just is a no-brainer at this point. Once you get down to about
Right.
15 cents a kilowatt hour, you got to start getting, rolling up your
Okay.
sleeves and sharpening your pencil, so to speak, to make sure that, your development costs are below a certain threshold so that you can actually get your return back on your investment, right? So, yeah, every state is a possibility. And on top of that, energy rights work internationally. So it's all based off of English common law. So the United States, the UK, South Africa, India, Australia,
The concept's the
Canada.
same. The concept's the same.
Exactly. Exactly. And
And
so,
and I mean, you keep saying energy rights. Why is it important that this is a why are we structuring it this way as opposed to say a sale leaseback on the roof? Like what why in this fashion?
so there's a couple of important kind of wonky, finance quirks that occur in the ownership
Okay.
of real estate. And so your current alternatives are solar leases or power purchase agreements, PPAs as they call them, which are essentially
Sure.
long-term guarantees. They're like 20-year contracts that have a fixed rate that escalates over time. There's
Right.
also energy service agreements that are basically the same thing, and you also have, in the United States, this concept of PACE financing, which is property assessed clean energy financing, which is
Which I've heard
essentially
of.
a
Yeah.
tax. Yeah, and I'm sure a lot of folks have seen that. And in
It's an
all of
extra
these,
property tax. Yeah.
right? I mean, in California, we have something called Mello-Roos, so it's something similar to that extent. But I can take a little bit of a moment to talk about each one of these. So, solar lease and PPA is pretty much the same thing, except in certain jurisdictions, you're not allowed to sell power, so you're leasing the equipment instead. But in those
Okay.
situations, you have to basically get the credit of the off taker. When the off taker is the person is actually paying for the electricity. So if it's the building owner, they're going to say, hey, we need a guarantee by the building owner. Well, a lot of us understand that building owners don't typically own their properties outright, as a corporation or as a
Right.
business.
Right. 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 Right.
They have an LLC or a special purpose vehicle. So a lot of times that credit isn't really there for them to be able to do that. If the tenant is paying for the electricity, well, it's almost the same thing because real estate gets around the credit issue by having a real property interest, right? That's how you can have multi-tenant
Okay.
buildings that have lease terms that are less than the loan term, right? And so in that
Got it. Got it.
situation,
Got it.
you
Got it.
have
Got it.
this.
Okay.
You also have a duration issue, right? Because a lot of times, tenants are only in a property 5 to 7 years, maybe 10 years, and you have this equipment that is 20-year term, right? So property owners looking at it like, well, my tenant wants it, they're the ones paying for the power, I get no real benefit from it. Why would I spend the money up front on capex when I could spend it elsewhere to increase my revenue or decrease my expenses and make sure I have a stronger NOI?
By the way, it's interesting when you say things like, the equipment has a life of 20 years, because what I found so fascinating about solar is while I realize it may be warranted for X amount of years, a lot of this equipment just keeps going. Like once it's up and plugged in, it's not like there's moving parts. This isn't an engine. I mean, so
Right.
and I'm not saying you wouldn't repower it or upgrade the panels or something like that, but it's been interesting to me with solar how much of it is once you set it up and turn it on, it just kind of works, which compared to everything else I deal with, which doesn't work, it's actually
Yeah.
refreshing. You know what I mean? Like the
Totally.
elevator you have to have serviced. Like everything else, roofs get patched, but solar it just kind of keeps chunking along.
Yeah,
So
I mean,
that's
and
uh
that's the thing.
that's
There's
attractive.
actually a great example. I think in Santa Barbara, you can maybe Google this, or your viewers can Google this. They have the
Mm-hmm.
longest running solar panel out there that's been there since the 70s. It's been like 50 years, and this panel is still
Right.
producing power. And you got to wash
True.
it, you got to maintain it, you got to make sure that if it's on a roof that it's built correctly so that it doesn't impact the structural integrity or the
Sure,
membrane
sure. But
itself.
the panel
But
itself,
yeah,
right.
it
But
keeps
the panel's
running. I
still
mean, that's the
going.
thing.
And
And
I just find the fascinating.
yeah, and there's
So
another
so
part of it
let's
where, sorry.
No, I was just gonna say, I was just gonna jump in and say, so you guys are doing this, and that's great. Where are you finding your customers? How do they find you? How do you find them? Is it what's that been looking like?
Yeah, so a lot of the way that we've been doing our acquisitions or our sales, if you will, is direct to property owners through our relationships and our network here in California. I mean, I'm kind of a California kid,
Sure.
grew up in Southern California, went to Berkeley, did a triple major in Northern California, came back down, moved back up, came back down. So I've got quite a good network in California. But moving forward, we're actually pretty excited. In the next quarter or two, we're hoping to finalize this energy rights portal that's going to allow third parties, property owners themselves, installation companies, EPCs, and engineering, procurement, and construction companies, and actually real
Hmm.
estate agents and brokers as well, to just go online, put in a property address, and find, okay, I can get this funded and built, and here's my new price of power, with one click.
Right.
And so once we have that
Here's
rolled
my
out, we're
roof.
going to
Here's
start.
much power. Here, yeah. Here's my
Yeah,
building. Here's how much power I need. What do you want to do here? Yeah. Sure. Sure. Sure.
exactly. And
No. It.
like we were talking about earlier, there's the energy profile of the building, the energy price of the building, and then the just the layout of the building. A lot of buildings have what they call the postage stamp problem, which you got a 40-story high rise that could be 1 million square feet, but you have 25,000 square feet for solar, right? So you're not really going to
Right.
be able to get a dent in on the overall energy profile, but on the square footage that you're generating power on, you can actually get a pretty good return, right? I mean, so it's just a matter of who's going to take on the risk, who's going to take on the investment, and how was the going to be split with the owner and the tenants and with the investors, right? I mean, it's really just a
Right.
alignment
Right.
of
Right. Right.
interests process. Yeah.
No, it's interesting. It's interesting. So, you've been doing solar, and I guess this is also financing other stuff. So, I guess just a couple other questions. As you've been growing this business, because you've been doing it for now about a decade, surprises, good, bad? I mean, no business ever grows the way you expect it to. So, what would you say have been a couple surprises along the way?
Yeah, I mean, I think the biggest ones are that Murphy's Law is a real thing. I think everybody needs to understand that as you're a real estate developer, whether it's traditional real estate or whether it's energy rights development like we're doing, you have to know that if something's going to go wrong, you better be prepared for it because it will. And there's situations that you think might take 2 weeks. It shouldn't take longer than a couple of weeks to review something, whether it's legal documents or whether it's permitting or plan checks or interconnections, and things just take much longer than you expect. I mean, it just if you're
Sure.
planning for a year, expect two, right? Like that's whether it's the right way to
Right.
look at it or
Right.
not. Everybody's working on trying to get things done in a shorter period of time, but you just have to plan for the worst case scenarios. And if you are, and if you do, then you end up with a product and a project that works, right? I mean, that actually gets built and that gets that beats the model's expectations afterwards. Otherwise, you know, um, it takes a little longer. I can give you a little bit of an anecdote. Recently there were some
Yeah,
pretty
please.
bad winds. Yeah, thanks. Pretty bad winds in Northern California in early 2023. So like an 80-foot
Okay.
oak tree fell on our project, right? I mean, oh my gosh, right? Like I'm getting a phone call Sunday morning,
It's going to
6
crush
a.m.
everything. Yeah.
Oh, absolutely. And I'm like, all right, well, we got to get somebody out there. We got to make sure everything's safe. So we have our team out there within 4 hours, right? I mean, we're on a Sunday, right? They were ready to go and we got everything done. We, cleaned everything up, made sure everybody was safe, made sure that everybody was comfortable with our plan of action on how to repair this thing and how to deal with it. And then you have supply chain issues, right? All of a sudden, there's issues where it's going to take a little bit longer to find a certain part, or the steel's going to take longer than you expect, and so all that kind of gets added into the time frame of how fast can you actually work, right? So we do that. We get the project fixed and repaired in record time. I think it was like a 4 to 6 week period of time, and everybody was just super happy with how that all went. Things back working, and then next thing you've got to go through getting everything signed off by the AHJs, or the authorities having jurisdiction in the area, right? So that then takes, I think, 2, 3, 4 times as long as the actual repairs themselves, right? And so
Right.
going into a,
Right.
a, a, a construction project or a development project, you just have to be, prepared for Murphy's Law. And, that was uh, something that we prided ourselves with how we handled it, but it definitely took much longer than we expected. So if anything that
Well,
we
and
learned from
and
it,
also,
yeah,
yeah,
I was going to say
I
that
would just
if we learn,
drive in on some. Yeah.
yeah, go for it.
Sorry,
Sorry,
go
my
ahead.
bad. Please.
No, I was just no, it's not. I was just going to say, the soft cost issue I think is also interesting about your business model, and one of the reasons I wanted to talk about it because you know, as much as you have to do permitting and paperwork, the fact that you're not doing it with the utility because you're behind the meter is a time saving. I mean, it
Yeah.
is. Just utilities are by their nature large governmental organizations. They just add time to it. And the reoccurring theme I've always had in all these energy efficiency conversations is it's not about the cost of the equipment, it's not about the return on the money. It's like, okay, from the time I signed this agreement with you, when does it actually happen? And usually,
Right.
when I've had these conversations, the first answer I get back is it all depends on the regulator. And that just drags it out, And I mean,
Absolutely.
I'm not saying you still don't do the deal, but obviously, I'm more excited if we can start sooner than later. So
Yeah.
that's kind
Yeah,
of the deal.
absolutely. And if you're going to be interconnecting, there's almost no way to get around working with the utility, and it does take time. And so, what I was going to say earlier, and goes along with what you just mentioned, is that the one thing that we learned from all of this, and that we continue to try to educate all of our clients on, and property owners and tenants alike, is that if you're even a bit interested in doing something like this, you need to start today or yesterday if you really can. I mean, at the end of the
Mm,
day, these procedures just, they take time. They're almost a black box. They're logistical. They're operational, and you've got to go through it. A lot of it, life and safety, very important, obviously, but a lot of it is
sure.
bureaucratic, and there's going to have to be some sort of a change in terms of how these projects are interconnected or how these projects are built. And if the utilities continue pushing back, a year, 2 year, 3 years, prices go up in the meantime, nobody's getting their stuff upgraded. It's just like a natural response in the economy that people are going to find solutions outside of the utility. And so if we're behind the meter and we can
Right. And they'll do
develop
something else.
energy that way, not interconnect, and have the same type of reliability, why not? Then it's just a
Why
matter of
not?
who pays for
So,
it.
one last question. Who pays for it? Yeah. So
Yeah.
one last question. I mean, the real estate industry goes up, it goes down, and debt markets open, debt markets close, you have hot markets, you have weak markets. How does the relative health of the real estate market overall affect you? I mean, like if I've got an office building and the office market sucks, but maybe I still have tenants, maybe rents have dropped, does that really affect the conversation I have with you, or is it really kind of the same conversation? I wonder what your experience is with talking with owners.
Yeah, it's very interesting because we started the company right around the end of the great financial crisis, right? So like I was going through that
Okay,
through my
sure.
private equity acquisition days and my, investment advising days, and then, started the company thinking, hey, these property owners are going to need additional income. We're going to have to figure out ways to increase the value through NOI improvements, right? And so that was for
Sure.
us a very clear message to the market that there are other ways, ancillary ways to produce NOI on property that are going to be advantageous. The problem is that sometimes you have different levels of priorities for property owners, and it makes all the sense in the world. If you're a property owner and you have a 50 to 75% LTV loan, well, then interest rates and your capital stack are going to be your number one priority. Your second priority, if
Right.
you're in a really hot market, is leasing, right? You want to get the highest lease rates from the best tenants you possibly can. And then if it's a down market, you're
Sure.
really focused on operations and OpEx, making sure that all of your expenses are tightened up and that you're not, spending more than you have to. And so from our standpoint, it's always a good time to have these discussions. It's just that with interest rates higher, with the work from home issues compounding, and now with the local jurisdictions, your cities, New York, Los Angeles,
Right.
your state regulations, your federal regulations, now all of a sudden there's kind of this like perfect storm that property owners have to deal with, where it's like, capital is now a problem. Your income is getting hit on a revenue side, and your expenses on the inflation side, and then all of a sudden you have these regulatory issues that you have to deal with on disclosures and whatnot. So we're coming in and saying, hey,
Right.
listen, we're not going to be able to solve all of your problems, but by developing your energy rights, you can decrease your operating expenses, you can increase your NOI, we can handle and cover the cost of all of your disclosures for ESG, sustainability, net zero. And,
For
to be
people who
quite
care about
honest,
that, sure. Yeah.
yeah, insurance companies and lenders and investors, they're all asking, what is your strategy to deal with sustainability, or with the
Right.
electric grid potentially
It's
not
no,
being
it's more
as
of a
stable as it used to
conversation.
be. Yeah, and that's the thing. It's
It's
like,
more of a conversation than it was before.
yeah, totally. And as
No,
as more of these issues come up internally, property owners are more open to hearing solutions, because you know uh, if their lenders are asking for it, if their investors are asking for it, and their insurance companies are asking for it, they're gonna have to do something.
no, it's interesting. It's interesting, and that's what I was trying to tease out. Was it sounds to me like now is a. I mean, if we were all making money just borrowing cheap debt and buying buildings, then maybe we'd be more excited about that than about something like this. So that makes a lot of sense. Um, cool. Well, look, I think it's fascinating, and it's good to talk about a bit. I guess last question I have would be in terms of minimum size for this to work. Like in your experience, I mean, I'm not going to do this at a house. So, like, what size as an owner should I be thinking that we should even be engaging these conversations based on, like, square feet of industrial, square feet of office? Like, what size building starts to make sense where you think it pencils?
Yeah, so I wouldn't necessarily say not to do it on your home. So if you own your own house, or if you rent and you want to have solar and decrease some of your electricity rate, pricing, whatnot,
Sure.
I would do
But
it.
to
But
work with a company like yours,
yeah, for us,
where
we're
does it start to
typically
make sense?
looking at projects that are a minimum of about, we would say, 30,000 square feet, right? So with
Okay.
30,000 square feet to 50,000 square feet, whether it's rooftop space or whether it's covered parking area, that kind of starts moving the needle. That all of a sudden everybody, can feel good about spending the time to get these projects up and running. Anything less than that, anything
Sure.
smaller than that, we have to aggregate to get everybody interested. And that's kind of where this energy rights portal that we're going to be releasing is going to be helpful, because we're going to be able to get folks to put in their information, essentially get on a list and say, okay, we're going to do, quarterly closings basically. And you're either in on Q1. And if you get in time and you get all your information on time, and we can, check all the boxes correctly, then we'll move ahead. If not, move on to Q2, move on to Q3, move on to Q4. And then, essentially set up this system where folks that have smaller properties or projects can get, their projects funded, and not take on the risk. But otherwise,
And
I would say 30 to
sorry, go ahead.
50,000. Yeah.
30 to 50. And I know you haven't launched that portal yet. Will it be on EPR Squared? Does it have its own brand? How will we hear about this?
That's a great question. I think we're going to start on the website, and then once it
Okay.
once it breaks, which once we have enough people working through it, and we have to expand, we'll start thinking about whether or not we want to expand it, natively on our own website, whether we want to have it be separate, spin it off or whatnot. But we got to take it one step at a time. And for now, I think we're just excited that we're finally at that point where we're getting a lot of people wondering how to do this and how to get involved. And the education process, it just takes a lot of time. So hopefully this will shorten that time frame and get people up and running with their own behind the meter solar, but also microgrids and virtual power plants, which we didn't really have a chance to talk about much, but that's coming down the pike as well.
Well, look, we're chatting. We're doing this recording at the end of January, and realistically, most of my recordings don't go out for a few weeks, just because I always have a few in front of people. So that might be a conversation we could have later in the year. So we'll see. We'll see. That's there's this is a rapidly well, it's funny. It's a changing landscape, and it may feel from tech point of view, what we're doing is slow, but from real estate, it's lightning fast. Because in real
Oh yeah,
estate, everything is so gosh darn slow that to talk about anything in 3 months, 6 months, a year, real estate people think in decades. It's a very different mindset. So yeah, no, that this is
exactly.
exciting stuff. It's exciting
Yeah,
stuff.
the time frame
Well,
is,
cool.
is much
Well,
different. So
yeah.
yeah,
So, Chris, thanks again for joining me. And for those who are listening again, Chris's website is EPR Squared.com. And thanks again, Chris. Glad we had the chance to chat.
much appreciated, Josh, and looking forward to talking with you again soon.